Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
Okay, today we once again have Adam Gower with us. With Adam, it's great to have you again. You are a PhD. Did you get your PhD from London?
At University College London, yeah.
Yeah, fantastic program. So we are going to talk about syndication today, best practices of syndication, and a number of other things. So just fill us in on exactly what you do, Adam, and then we'll go from there.
Sure. Okay, so what I do is primarily I provide strategic guidance to multi-cycle seasoned real estate professionals. And what they're looking to do is syndicate, is to raise more capital from typically high net worth individual investors. The term used is accredited investors. It's okay. So it's a term that it's a certain level of income or net worth, etc. That the SEC, it's an SEC standard. So they come to me wanting to understand how to structure funds, how to structure waterfalls, what are best practices in syndication, how to find more investors, how to raise more capital, etc. So that's the guidance that I provide. But my team also builds systems for them to scale their capital raising efforts. So really what we're doing is moving the old school methodology of raising capital, which is to meet somebody in person. And there are reasons for that, structural reasons. It used to be prohibited to do what's called general solicitation. You couldn't advertise, basically. You had to have a pre-existing relationship with somebody before you could solicit from them an investment in your deal. In 2012, the laws changed that allowed for general solicitation. That means you can advertise. And if you can advertise, first of all, you can scale, but you can also use any kind of digital marketing to elevate your visibility, establish your authority in the industry, attract, nurture, and convert prospects into being investors. So we build those digital marketing systems, as well as my primary role is providing guidance and advice, almost as though I'm a board member, right? Somebody who can advise the CEO. But my team builds the systems. So I give advice. It's all well and good. Actually building the systems and executing is not easy. So we provide that. We provide that as well. And so, Bruce, our clients have raised, well, they handle probably, I think my website says 35 billion of AUM. It's actually close to 45 now.
Wow.
And they've raised close to $1 billion of equity capital from individual investors with minimums as low as 25,000. Wow. So that's basically what I do now. But the world has changed a lot. So investors are very different than they used to be yesterday.
But so you're probably familiar with the term mastermind, right?
Yes.
Yeah. So this sounds like a much more sophisticated operation than a typical sort of mastermind approach.
Well, it's more advisory and consulting, basically. Like I say, I'm on a couple of advisory boards. This is similar to being a board member, where you're coming in with strategic guidance, you're providing advice and support to the CEO. So in some ways, it's similar to a mastermind. A mastermind typically would be small group, where you would have multiple people. These are all, for the most part, I mean, we do a mastermind as well. I do have a mastermind as well.
Oh, okay.
For people who don't want to engage us to do it for them, right, to build these systems, but they do want my guidance and they want to know how to build the system. So we have a mastermind that we've actually got another one starting in November. I don't know if this podcast's going to go out in time. November's next week, a week after. But we have another one that will start in a couple of weeks, or maybe a little bit longer. From now,
give me a little description of what you say it's going to start. So what's the process here?
There's 3 months. It's 3 months of weekly calls. So basically, every Thursday, typically Thursday at noon, we meet. Then I have done full live trainings. People have paid us. They invest $15,000 to do these trainings with us. They're 3 months. There are 12 sessions, massive amounts of support, training, and resources that really guide you through everything that you need to do or need to know, both on the kind of high level strategic perspective, but also technical actual execution. So literally some of that training is click here, click there to set up a automated email response system, or to build a capital formation optimized website. Like literally, I'll show you click here, click there kind of thing. And I'll walk you through that. So that's all recorded. But the mastermind, so you have that, and that is designed to roll out in a specific sequence, right? So you got to start here, and then you go there, and then etc. Until you've built your system. And then we move to advanced marketing techniques and tactics. But the training that's the mastermind that's coming up has that entire set of training videos. Those were also recorded live, but the mastermind are also their small group. But that's where I'll guide you through and do personal reviews of your website, of anything that you've got, provide strategic guidance, etc., as though you were a private client. By the way, our private clients pay us in excess, probably close to 100,000 over either 3 or 6 months to build these systems for them. And also for the guidance that I provide. So it's a dramatically discounted option for working with us. If instead of having us do it for you, we do it with you, kind of thing.
So it sounds like, if I'm interpreting this correctly, the mastermind group is a investor. Maybe he or she has a few properties, and they want to get into the syndication world, but they don't really know how to do that. And so you provide them a very specific way to kind of expand their products, expand their syndication and so forth.
Yeah. So what I would say, Bruce, is that there are plenty of places that you can go online if you are a novice, right? If you are new to the industry.
Right.
The training that I provide is very advanced. And probably it's better suited to people that have experience. They bought and owned, owned and sold. They have some experience. They've suffered a few knocks maybe. But they recognize, and come through the other side. So they're not, rank beginners. They have experience, but they don't have the scale that our clients typically have. So, if you're investing $100,000 in a professional like me to help guide and help you raise capital, typically our clients will allocate a line item to their next deal. And so their next deal, if it's a $20 million deal, our fees kind of disappear. It's less than the plumber, right? It's on the job, right? So we just become a line item. We don't really move the needle at all in terms of any kind of projected IRRs. If we move it a single basis point, I'd be surprised. So for folk that don't have the scale that our typical clients have, and I would say probably on the very small side, our clients have at least 100 million of AUM, typically a lot more than that. And their capital raising goals are, say, anything from, I think, really on the very, very small side. We're actually talking to a shop right now that is looking for us to help them build a GP fund. And so they're going to be raising probably $1 billion, actually, but all institutional. But they also have to raise GP capital. So we're going to help them with the GP capital piece of that. And so that's relatively small, actually. Funnily enough, that's a relatively small 10 million that we'll raise. We don't raise it, we help them raise it. So that's small, but they're huge scale. So the capital that they raise will pay them fees, and so we're very tiny part of their overall budget. So for folk that are smaller but want to scale, I mean, our systems work as well for shops that have, that have institutional investors or ultra net worth family offices. So if you've raised some money in the past and you see opportunity, I mean, there's some incredible opportunity, headed our way for not just distress, but also there's a lot of there's going to be a lot of liquidity pumped into the economy. Tax breaks are incredibly motivating for investors, real estate investors at the moment, and you're also going to see a lot of, we're probably going to see, at least, if not before, certainly after Powell is termed out in May, we'll almost certainly see interest rates come down. So the combination of deregulation, more liquidity, and lower tax incentives and lower interest rates, there's cause for optimism, at least in the near to mid future. And now is a really good time to be out there looking for deals, but it's no good if you can find a deal that you really like, that you want to buy, if you don't have the capital for it.
Can't do anything.
Right. Yeah. So that's how we help both our private clients, but also in the mastermind.
So are you finding, obviously the stock market's on a huge roll right now.
Yeah.
Or are you finding people, they want to take their gains and perhaps put it into real estate? What's happening in that market?
Oh, that's an interesting question. No, actually, on the contrary. So this is longer than a 20-minute podcast.
Okay, all right.
But what I will tell you is that there have been a lot of new entrants to the industry over the last few years. So not only did the Jobs Act of 2012 open up the industry to sponsors to raise capital, but by definition, it also opened up the industry to a lot of new investors that had never had the opportunity, never even knew they could invest in real estate. They couldn't. They didn't know somebody. It was prohibited. So what's happened is a lot of new sponsors have entered the industry over the last few years. Bruce, you know what's happened with from super low interest rates now to the high interest rates.
Right.
There's a lot of distress. A lot of shops have lost their deals, and they're going back to banks, and their notes are being sold. I'm working on one actually in San Francisco right now for a bank that asked me to help them. But on the flip side, a lot of investors have lost a lot of money as well, as those new sponsors have come in, raised capital, and then lost it. A lot of investors who bought into the real estate dream, in inverted commas, have ended up losing a lot of money. So what you are finding is that there is a lot of reticence. It's actually interesting because for the first time, it's really paralleling what's happening in the institutional world for a very different reason. Okay, so, but just concentrating on what is colloquially called the retail investor. The retail investor is hesitant to invest in real estate for a few reasons. Two major reasons. One, they have been promised the world by a lot of new entrants to the industry on the sponsor side. and been sorely disappointed. So they've lost money, they've lost confidence. They still know that real estate is a good investment, but they've been burned. So they're hesitant. And then compounding that is continuing uncertainty about where the economy is going, what's coming out of Washington, how the tariffs are going to impact us, whether or not interest rates are going to go up, whether or not the Fed is going to be compromised, independence is going to be compromised. There's still a lot of doubt. So you're finding investors are, ironically, in fact, actually, I think gold collapsed by 6% yesterday. I don't know what it did.
Oh, really?
It dropped. Wow. Yeah, it dropped 6%. It was the biggest drop since, I want to say, 2013 or something. I don't know if I can see the headline now. But it basically fell off the charts. But nevertheless, you've got this. I'm just looking on my screen, see if I can see it. But nevertheless, you have this environment, this very unusual environment where investors are riding a stock market high and also seeing incredible, even if they're not invested in it, seeing incredible returns or appreciation in gold. And this is normally, these two things normally don't go together.
Right.
Normally when the stock market goes down, you see gold go up as defense and then the other way around. Yeah. So this is very unusual. And what it's speaking to is hedging against the uncertainty that there is in the market. So investors are not looking at real estate, but they should be, right? So they really should be. I mean, you've got platforms, and I won't mention. Well, I can mention like CrowdStreet, for example, very successful crowdfunding platform. At their heyday, were raising $40 or $50 million a deal. And I don't know today, but in the last time I spoke to them, they were raising at best $4 to $5 million a deal. So it suddenly got much, much harder. However, for sponsors who have good track records, who can tell a good story, meaning I don't mean fiction, right? But they have a good story that explains their background, their track record, even addresses mistakes that they've learned from. Anecdotally, we have clients in Chicago, an industrial guy, who's the first email, when you sign up on his website, the first email you get from him, automated email, says, "Here's why you shouldn't invest with me." Oh my goodness. He just opens up and he says, "This is why, don't invest with me. Here's why." And one of the reasons is he lost money in the global financial crisis. And so now he's super conservative on debt. Well, of course, by saying don't invest with me because I'm so conservative, guess what? It's actually really compelling, and it makes you want to invest. So it's actually very clever. We put that campaign together for
that is genius. Yeah.
But so what you want to have is you got to have a good platform. So that's what we teach in the mastermind. That's what we build for our clients. You want to have a good platform that tells your story on the one hand, and then also you've got to have good deals. Yeah, right. So if you've got opportunistic, particularly opportunistic deals, that are undervalued for any particular reason, then that is also extremely compelling for accredited investors to get them back off the fence and into diversifying back into real estate.
Well, that's gives me an interesting question about how obviously the people coming to you really need to have a good track record, a good story. Maybe some of them have some blips, obviously, and like your Chicago group, but how do you help them build that credibility if it perhaps is not there?
Transparency, really. Yeah. And look, Bruce, people invest with people.
Yeah,
and I know it's a little glib to say that, but it's really the truth of it.
No, I agree.
If you are authentic, okay. If you are okay, I'm going to contextualize why this is so important. So a lot of new investors, a new sponsors into the industry,
a new syndicator.
New syndicators who knew nothing about the industry learned from quote gurus out there who had their own masterminds. A lot of those people had no experience in real estate either. So you had the blind leading the blind. So what they learned what they learned, what they got was templated everything. They got templated content, templated spreadsheets, for heaven's sake, underwriting spreadsheets,
cookie cutter.
templated everything. Now,
okay.
but of high quality. Add to that, or reasonable, right? They basically higher quality that they could deliver themselves because they didn't have the experience or background. So they learned how to market their deals before they learned how to actually execute on the deals effectively.
Oh,
plus now you add this extra layer of AI. So now all of this templated material has been amplified by the power of AI. So what you have now is high quality marketing solicitation materials, but it all sounds the same. I mean, there are some really obvious giveaways. If you ask somebody, what do you do? And they say, I help my investors. And this is like, you'll see this like literally everywhere. If you hear somebody say, if you ask them, what do you do? And they tell you, I help people earn passive income, build wealth, and gain financial freedom, you know they're not really in real estate. All they're in is marketing real estate syndications, right? Just period. That's a real
AI generated or whatever. Yeah.
That's what they'll tell you. And a real sponsor will say, well, we're a multifamily ground up shop and we focus in the Southeast. We're vertically integrated or whatever. And they'll tell you, okay, all right, now you know
this is what we do.
Right. Yeah, so we actually do it, right?
Yeah,
that's exactly right. So how do you stand out in this world of templated or AI enhanced templated sameness? You have to be authentically you. You have to be honest with yourself first. I've been writing about this a lot on LinkedIn. You have to be honest with yourself first and not try and act out a role that you think other people will be attracted to. If you do that, you're going to create dissonance and between your messaging and the reality of who you are, so that when somebody does actually meet you, and it might be on a webinar, it could be anywhere, that they actually connect with you, they'll realize that the story you've been marketing is not consistent with the real person. So that's number one. You want to stay away from that. That's why you need to be authentically you. So you got to understand who you are and then just be honest and not be worried about what people think. Why do you not have to be worried about what people think? Well, there's a clear reason for that, and it's a statistical reason. And the statistical reason is called here in the United States, it's called the bell curve. We learned it was called the normal curve. Exactly.
Right. Interesting.
Bruce is waving his hand across the screen. It looks like a big bulge, curve. Right? With outliers on both sides. Well, down the middle is the median, I think, or the mean. Down the middle is the mean, the average.
Exactly. Yeah.
Both sides. And as you move to the left side of the bell curve, and you go to 2 or 3 standard deviations away, what you have on the left are, if you're honest about who you are, like somebody listening to this podcast, right?
Yeah.
There will be those people on the left-hand side of the curve that think both of us, particularly me, are a total loser, right? They don't like my accent. They don't like the way I look. They don't like my intonation. They don't like my ideas. They don't like anything. They want nothing to do with me. That's on the left side of the curve.
Okay.
When you are out there marketing yourself effectively and properly, and you are being honest and true to yourself, potentially millions of people will come across your name. Tens of thousands, hundreds of thousands, at least into the millions, will see you or have contact with you. And if you're doing your job properly, they will start to get to know you. Well, guess what? On the other side of the curve, for everybody of those millions who think that you're a loser, there is always somebody else who is just dying to invest with you. They like everything that you have to say. They don't care that you've only been in this for 5 years or 10 years and you've not been in this for 30 years. They don't care that you made mistakes. What they like is that you've acknowledged your mistakes, that the way that you think, the way that you talk, the maybe philosophical ideas or insights that you have, your views about the market and where it's going, those all resonate with those people on the right-hand side of the curve. They will invest with you. So it's those people you want to be speaking to when you do your marketing online to raise capital. And the only way to find those people is to be true to yourself, is to be honest and authentic, because then you will attract people who just like you. And don't worry about all those that don't, because they'll never invest with, no matter what you say, they won't invest with you in one way or the other.
Even if they do invest with you, they probably will torture you.
Exactly. You'll end up having problems. That's right. That's exactly right. You want people who just like you. Know, like, and trust. Those are the three pillars of digital marketing. You just want, and life is short. You want to be working with and getting to know people who just like you for who you are, because inevitably you're going to like them too, right? If they like you for who you are and you've had no contact with them, they've just learned who you are from your online presence,
right?
There's a good chance you're going to get on well with them. So those are the people that, right, in life, those are the people that you, and by the way, the other thing is you don't need that many investors, right? So if you think about, I mean, some of our clients have hundreds, if not thousands, but if you have 100 investors who invest, think about it this way, 100 investors invest 25,000, that's 2.5 million. Average investment, if your minimum is 25,000, your average investment is going to be 45,000. So if you've got 100 investments, that's 4.5 million of equity, plus your contribution. So now you're at 5 million with just 100 people. It's actually, you can scale very effectively if you do it right? If you go online and you do it properly, you can actually scale very effectively. And you can build a very nice portfolio of real estate with very few people, all of who like you, and then start talking about you to all their friends, and they start investing with you as well.
So you can take this system basically, and whether you're a novice or whether you're a highly experienced real estate syndicator, you can use the system, build the system, and bring in investors, whether it's 4 million or whether it's $1 billion. The system basically works sort of the same.
Yeah, it's exactly right. Look, Bruce, there's actually no mystery to this. Anything that you buy online, anything that you consume, I can't think about, I don't know what, but any kind of consumer product is marketed to you using the exact same principles. In fact, the marketing principles that we employ, there's nothing new to them, Bruce. These have been developed. These were developed over 100 years ago. I mean, if you really want to get into this, there's some amazing books. Hopkins, Paul, I think, oh gosh, what's his name? It might be Bruce Hopkins. I think it is. It's John Hopkins. No, who the heck is it? The Robert Collier Letter book is a good one.
Okay.
And then there's Scientific Advertising.
Oh, wow. Okay.
Let me see. Advertising is Claude Hopkins. So these were books. So Robert Collier's book, the Robert Collier Letter book, Scientific Advertising. Actually, I preferred some of his other books than Scientific Advertising. But Claude Hopkins' book, these were written in the 1920s. Yeah. And what they talk about is these were guys that developed incredible marketing systems at the time that were all UPS, all mail-based. So they would send out test samples of letters, like one of the famous things, I forget if it was Robert
Hopkins,
Collier, if it was Claude Hopkins, one or the other. They used to sell these 6 feet of books. You buy 6 feet, like books by the foot.
6 feet of books, yeah.
Books, right? You buy 6 feet of books. This is one of their campaigns.
Yeah.
And the way that they would sell these is using what we call long-form sales letters. So these were really long letters that they would send out. They had a call to action that said, here, buy this thing, just return this clip. So there's your call to action, return this coupon, and we'll send them to you absolutely free.
Oh,
And if
wow.
you don't like them, send them back to us. And if you do like them, after a month, we'll send you a bill
Okay.
and you pay us. Right? That's how it
Yeah.
works. And so what they would do is they would basically create these marketing campaigns that were all physical mail, right, and
Right.
physical letters that they would send out with stuffers and all kinds of
Yeah.
things.
Old school.
They would. It was old school, but it was what it did was it tapped into the one thing that never ever changes, and that is human psychology. Humans are driven by the same psychological impulses then as they today as they were then.
The human mind had not evolved in whatever 100 years. Yeah.
It's not changed. And
Yeah.
so
No change.
one of the core triggers for marketing today, as it was then, is this concept of FOMO, fear of missing out. These are concepts that they understood, tested, and that over the years have been developed into incredibly sophisticated marketing techniques. But at the core, they're all the same. So what I do is really 100 years old. It's just adapted to today's digital age and to commercial real estate capital formations. That's all. It's nothing new. It's just it's advanced and adapted
And tested.
and tested. And that's the other thing. I mean, we test stuff all the time. It's the process of testing never ends. It
Right.
never ends. We'll send out emails with so we have this kind of cool little system where we can send out emails with two subject lines to see which subject line works the best.
Different one. Yeah.
And whichever works the best, so we'll split up a list, test it. Whichever works the best, then we'll send that to the rest of the list, because subject lines are really important. And that's how Claude Hopkins and Robert Collier and others like them in the early 1900s. That's what they would do as well. They would send out letters. Wow. They knew where the coupon came from. And so you see, this letter got more responses than this letter. So we'll send out 1 million letters with this, with the champion letter that we know works better.
Yeah. These people that come up with, we're going to send out a new tested, we're going to test some lines. This has been done for hundreds of years. Well, 100 years.
At least 100 years, probably before. I've only been reading it, I've only looked back a little over 100 years. But yeah, so anyway, that's how you raise money.
All right. Well, if somebody is looking to become a syndicator or is already a syndicator, where can they get a hold of you, Adam?
Thank you for asking. Well, if they're watching this, you can see my email address on the screen. It's adam@gowercrowd.com, adam@gowercrowd.com, or just go to gowercrowd.com. That's my last name, GOWER, and then crowd, CROWD, gowercrowd.com. And I have a newsletter. It's a free newsletter. I try and talk about things that are authentically interesting to me. It comes out once a week or so. And you get an email from me, and if you reply to that email, I'll get it and I'll reply back to you.
Well, get on the bandwagon here because things are changing, always changing. So this has been great. Our second conversation. I think we're going to have to do this again come the new year so that we can update from where we are now.
I would be delighted to, Bruce. A pleasure meeting you. Thank you for having me.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.